In the global arena, a new act is unfolding, not with armies or traditional weapons, but in the rapidly evolving world of digital ledgers, international finance, and technological innovation. The battleground is no longer just about military might or trade tariffs, it's about who will control the future of money, data, and influence. As nations race to adapt, the stakes have never been higher, and the consequences will ripple across every continent. As of July 23, 2025, China has launched its boldest campaign yet to challenge the supremacy of the US dollar. This isn't just a headline, it's a calculated, multi-layered effort to shift the balance of global economic power. For decades, the dollar has been the backbone of international trade and finance, giving the United States unparalleled leverage. Now China is determined to rewrite those rules. This is more than a technical shift. It's a strategic move that could reshape the global economic order and impact lives from Shanghai to Chicago, from small businesses to multinational corporations. The way people pay, save, and invest could all be transformed as new systems take hold. The ripple effects will be felt in everyday transactions and in the boardrooms of the world's largest companies. Beijing sees a unique window of opportunity. With US policy often seen as unpredictable and global frustration with dollar dominance rising, China is positioning itself as a credible alternative. Many countries, weary of relying on a single currency, are now listening more closely to Beijing's pitch. The world is watching as alliances shift and new partnerships form. The strategy is clear: promote its own payment systems, expand currency swaps with trading partners, and build a network that reduces dependence on the dollar. By forging new agreements and strengthening financial ties, China is laying the groundwork for a new era in global finance. At the heart of this push are digital innovations like the eCNY, China's digital currency, and Yuan-based stablecoins. These tools promise faster, cheaper, and more secure transactions, and they're already being tested in real-world scenarios. If successful, they could set new standards for how money moves across borders. The outcome of this financial rivalry could redefine global power for generations, shaping not just economies but the very fabric of international relations and daily life around the world. To truly grasp the scale of China's challenge to the global financial order, we must first look back at the remarkable journey of the US dollar, a journey that has shaped the world as we know it today. The dollar's historic rise didn't happen overnight. It was the result of decades of economic growth, political power, and strategic decisions that positioned the United States at the center of global finance. After the devastation of World War II, world leaders gathered at Bretton Woods in 1944 to rebuild the international monetary system. They agreed to peg their currencies to the US dollar, which itself was tied to gold. This decision made the dollar the anchor of global stability, and the United States the world's banker. But the story didn't end there. In 1971, President Nixon broke the dollar's link to gold, unleashing a new era of floating exchange rates. Yet instead of weakening, the dollar's dominance only grew stronger, especially as oil, the world's most vital commodity, became priced exclusively in dollars. This so-called petrodollar system cemented the greenback's role at the heart of global trade. As countries needed dollars to buy oil and settle international debts, demand for the greenback soared. The US gained unmatched economic leverage, able to influence markets and shape global events simply through its currency. This dominance allowed the United States to finance its deficits with ease, borrowing cheaply from the rest of the world. It also gave Washington powerful tools, like sanctions, to enforce its will by controlling the arteries of global finance. Over time, the dollar became more than just a currency. It became the language of international trade, the default for pricing commodities, and the backbone of the entire global financial system. From Wall Street to Hong Kong, from oil markets to central banks, the world revolved around the dollar. Challenging this system means confronting not just a currency, but an entire ecosystem, one that has been meticulously built and reinforced over the past 80 years, shaping the rules and rhythms of the global economy. So when China steps forward, it isn't just taking on the dollar, it's challenging the very foundation of the modern financial world, a legacy of the 20th century that continues to define our present and will shape the battles of the future. China's push for the yuan is driven by strategy, not pride. For decades, the global financial system has revolved around the US dollar, giving America enormous leverage over international trade and finance. But China, as the world's second-largest economy, sees this as a vulnerability, a potential weakness that could be exploited in times of conflict or tension. Beijing fears US sanctions could threaten its economic stability, as seen with Iran and Russia. When the US imposes financial restrictions, entire economies can be cut off from the global system almost overnight. China's leaders have watched these events closely, realizing that their own economic future could be at risk if they remain dependent on the dollar. The trade war and tariff battles of recent years underscored the risks of dollar dependence. Every new round of tariffs or restrictions reminded China that its economic power could be undermined by decisions made in Washington, not Beijing. China wants to reduce this vulnerability and shield itself from external shocks. By promoting the yuan, it hopes to build a financial system where it has more control over its own destiny. China also seeks the privileges the US enjoys: lower borrowing costs, greater influence in global markets, and less exposure to unpredictable US policy shifts. If the yuan becomes a true global currency, China could borrow more cheaply, set international standards, and protect itself from foreign pressure. As the world's top trading nation, China finds it remarkable that the yuan is used in only a fraction of global payments. Most of its exports and imports are still settled in dollars, meaning China's vast trade network is ultimately tied to the US financial system. Promoting the yuan is central to China's vision of a multipolar world, where no single country dominates. By offering an alternative to the dollar, China hopes to attract countries wary of US dominance, especially those who have faced sanctions or political pressure themselves. The yuan's rise is a cornerstone of China's strategy to reshape the global order. For Beijing, this is not just about money, it's about security, influence, and the future balance of power in the world. China's digital leap is a key pillar of its currency strategy. The eCNY, already piloted in major cities, is now set for cross-border trade, bypassing the dollar and US banks. This digital yuan promises faster, cheaper payments, and a system independent of SWIFT. Meanwhile, Chinese tech giants like JD.com and Ant Group are pushing for yuan-based stablecoins, aiming to break the US dollar's monopoly in digital tokens. Hong Kong's new stablecoin regulations provide a launchpad for these innovations. The approach, a state-controlled eCNY for big transactions, and flexible private stablecoins for retail and online commerce. China is building a digital financial ecosystem designed for global adoption. It's a two-pronged assault on dollar dominance in the digital age. Beyond digital currencies, China is strengthening its traditional financial infrastructure. The Cross-Border Interbank Payment System, CIPS, is China's answer to SWIFT, enabling yuan payments without touching the US system. Currency swap lines with dozens of countries let central banks trade directly in yuan, bypassing the dollar. These swaps now total nearly $600 billion, deepening China's financial ties with partners like Argentina and Pakistan. UnionPay's QR code network is expanding across Asia, letting tourists and businesses transact in yuan. Each new CIPS participant and swap agreement chips away at dollar centrality. China is methodically building an alternative financial system, offering nations a way out of the dollar's orbit. The shift is gradual, but the foundation is being laid. Despite China's efforts, the dollar remains dominant, used in nearly 90% of forex trades and half of global payments. The yuan, though now the fourth most used currency, holds just about 4% of global payments. Recent dips show the challenge: the yuan's share is volatile and still small. Yet yuan payments hit record highs in trade with Russia and other partners avoiding the dollar. Currency swap lines are growing, signaling deeper integration with a select bloc. The main barrier: China's strict capital controls, which limit the yuan's global appeal. A true reserve currency must be freely convertible and trusted, something Beijing is reluctant to allow. China's challenge is to expand the yuan's reach without losing control at home. The dollar-yuan contest is redrawing global alliances. China's financial infrastructure is creating a bloc of nations, sanctioned states and the global south, gravitating toward Beijing. For many, using the yuan is pragmatic, reducing costs and aligning with their main trading partner. This shift threatens the effectiveness of US sanctions and could embolden countries to defy Washington. The world may split into parallel economic systems, each with its own rules and dominant powers. Even US allies like Europe are hedging, exploring ways to boost the euro's role to avoid over-reliance on the dollar. The currency shift is forcing nations to rethink allegiances in a more complex, fragmented world. Economic and political interests are no longer neatly aligned. Experts see both opportunity and risk in China's currency push. Chinese analysts call this a chance to fix a fragile US-dominated system, but acknowledge capital controls are a major obstacle. Without open markets and free convertibility, the yuan can't become a true safe haven asset. Western experts warn that competing currency blocks could fragment the global economy and weaken collective action on global issues. Most agree the dollar won't collapse overnight. Its dominance is built on deep markets and trust. The likely future? A slow erosion of dollar supremacy, with the yuan gaining ground in China's sphere. The world is heading for a messier, multipolar currency landscape. The currency power shift isn't just for economists, it affects everyone. A fragmented system could mean higher costs, more volatility, and new winners and losers. For Americans, a weaker dollar could raise borrowing costs and prices, and reduce US global influence. For those in China's orbit, the yuan's rise could simplify trade and reduce exposure to US risks. The most likely outcome: a fractured world with dollar, yuan, and euro blocks competing for influence. Economic policy will become an even sharper tool of geopolitics. The transition could bring instability, but also new opportunities. The battle for currency dominance is about power, influence, and the future global order, something everyone should understand.